Hello everyone and a very warm welcome to today's cryptocurrencies update for Friday, February the 7th, 2025. Today we're going to talk about Bitcoin and Bitcoin only, and we are going to zoom in and zoom out once again. We'll start with the hourly chart and then we move to the daily, the weekly and the monthly charts to give you every time frame from the short term to the long term to make sure we cover every aspect of Bitcoin and where it currently is. And remember, we believe that Bitcoin is somewhere in this smaller fifth wave of a larger third wave. We do not think that this fourth wave or this fifth wave has occurred yet. And as you know, it has been basing for quite a while now, since November. That's 3 months. But ever since the 2022 low, November 2022, all the way down here, the Bitcoin has been basing for about 20 out of the last 26 months. So nothing unusual. Hang in there. And if we do get a break down, we are of course looking for 70,000. Though with 5 horizontal price actions over the last 26 months, accumulating to about 20 months, we must of course assume that this basing will also lead to a breakout. And in that case, we're looking towards the 120,000. So let's have a look at the charts. We're going to start off here with the hourly chart of Bitcoin, and we shared this with our premium members earlier in the week. And since then, there's not been much news to say because Bitcoin has once again on a shorter time frame gone sideways. Just as it goes sideways on a longer time frame since about January the 4th, and we're now almost January 8th, it has done nothing pretty much. So it looks like the ABC for this blue wave 2/B, we believe it's a 2, but it can be a B wave, of course, might be extending in time. So the 2/B wave is becoming more protracted. The invalidation level for this wave count is, of course, the low made on February the 3rd at around 91,000. The bears should get very careful if we break above this January 3rd spike high, because we do have what count best as a impulse higher. 1, 2, 1, 2, 3, 4, 3, 4. Okay, this is hourly chart. So every up candle is part of 1 and 3 and 5, and every down candle is part of 2 or 4. And we count it very well. Since then, the price action is quite sloppy overlapping. Again, the B/2 could have completed here already on the 4th, but it can become what we call protracted. And then we have a WXY for the true Elliott wave aficionados. We simply call it an ABC. Why complicate things with more letters in the alphabet? Elliott wave is already difficult enough. Well, it never hurts to get a third or second opinion, and this is work posted on X by Elliott Wave Forecast. They do a great job. I must always admit their wave counts are stellar, and also here they're looking for a corrective price action lower since the January or February 3rd high into around 94,500. All right, that matches quite well with what we're seeing here. The blue box is anywhere between a 50 to 76.4% retrace. That's very normal for a second or B wave. Okay, the black box is if we extend the A/W from the today's high, the B/X. The B wave in this case was about a 76.4% retrace of this decline. ABC, ABC. Okay, so we can still go all the way down here to as low as 92,500, 95,000. Matches quite well with other people are seeing. All right, zooming out. This is the daily chart. So every candle is 1 day, 24 hours of Bitcoin. And you can see that we've been stuck in this price range between about 92,000 and 106,000 since early November. So that is 1 month, 2 months, and now already in its 3rd month. As I've shared before, Bitcoin has had 5 consolidation phases since its low in November 2022, lasting anywhere from 2 till 9 months. The recent one was, of course, last year, pretty much from March to November before we saw a true breakout. I'll show that chart in a moment. So this can last for another up to 6 months if it so desires. And I'll show you a wave count that makes it possible, because it could be that we're off by 1 wave degree. For now, this is the preferred wave count where we're looking for this blue wave 2 to bottom, and then a 3, 4, and 5. Now let's assume wave 2 bottoms here at around 95, 165. Okay, 95, 165, somewhere around this level. A little bit lower is fine as well. And if we then apply standard Fibonacci-based impulse patterns, we can see that the blue wave 3, which is part of the orange wave 3, which is part of the gray wave 5, targets exactly the 138.2% extension in orange, and then a 4 and a 5 and a 200% extension targets exactly 161.8% extension of the 1 degree higher orange third wave. Then a 4 and then a 5, right to the upper end of this ideal gray wave 5 target zone, anywhere between 117 and 124,000. So this is the preferred path, contingent on holding at least above the February third low. If we go below that one, the 1-2 potential as shown here is invalidated, right? So we have orange wave 2, wave 1, wave 2 is then invalidated. And then we have to move most likely to a different wave count, and we will see a longer basing period. This is the chart I've shared with my premium members before. I think I've also now posted it publicly. So this is basing period 1, basing period 2, and this is then of course basing period 3 right there, right? Basing period 3. It's very, very long. And also here, huge basing period, nothing bearish. So why are we showing this? For the long term, the hodlers don't sell, right? We had panic here and we had panic here. I think the fear greed indicator was at 44. Are you going to follow the masses, or are you going to do opposite of the masses? Here we had fear as well. Are you going to follow the masses and sell, or are you going to buy? Look what happened. Again, it takes quite a while before it breaks out. So it can take quite a while for this to break out. When exactly, nobody knows. I cannot predict the future. It'd be a fool's game to try to actually forecast when this will break out. So it can last up to 6 months, and it's all it shows is that hang in there. It should, based on previous 5 patterns, resolve higher. Now, can we get a false break down? Yes, we can. We've had false breakdowns here, a little bit here, and we've had one here. So those are, and here as well, false breakdowns. But the bottom line is that every single basing phase has resulted in higher prices. So if the past shows nothing but gains eventually, we must also assume that the current price action leads but nothing but gains. However, there is no guarantee. Past performance does not guarantee future results. It doesn't. There is no certainty in life. So if we start closing below 89,000, we can indeed go all the way down here to this 72,000. It is a possibility. There is no certainty of a breakout. Okay, it's most likely, because that's what we've had all the time, but isn't also going to happen the 6th time. That's why I have these warning levels in place for the bulls. All right, that's really all there is to it with using this type of analysis. It's very simple, logical deduction and drawing conclusions. So then we can use, of course, our Elliott wave count and start maybe narrowing it down. If we're going to be in the starting gates of this wave 3 of 3, it should be pretty rapid. So then we must expect a breakout probably next week or somewhere the week after. That's about it. Okay, and you get the breakout, a retest of the breakout, etc., continuation. All right, and that should then conclude this larger third wave. Okay, this larger third wave. That's what we're looking for, and from that larger third wave, we will then most likely see a quite drastic, bigger fourth wave. Okay, down to possibly 50,000. It's possible to see that. But for now, if we do not see a breakout soon, next week or the week after, it is possible that we've completed already a larger third wave. Okay, there, green 3. And we're now in green 4, which can go as low as 80,000, as you can see. This is the 23.6 to 38.2% retrace of all of this wave 3. Very normal behavior. Also, after 3 comes 4, and after 4 comes 5. Okay, so that's really still showing that yes, we can base for much longer if we are indeed in this larger fourth wave, and we're going to see probably a long consolidation, just like we saw here. Not necessarily this long, but just a consolidation, because this wave 4, if we would zoom in once again, should then again bottom somewhere around here, this low 90s to high 80s. All right, that's typical. Look here at the gray wave 4. If we simply adjust the wave count from a 1-2 setup to a 5-4 setup, you see the difference? So here we label it as 3-4, and here we label it as 4 and 1-2 of 5 of that. Okay, then if we then assume we're going to see a slight breakdown, we should bottom somewhere around that level. Oh, we can go to 80,000. We can even go to 72,000 on this green wave 4. It's still not impossible. We have seen such deep retraces before for fourth waves. But for now, we must assume standard Fibonacci-based retraces and not outlandish retraces. Okay, that's simply all we can project. And of course, the wave 1 high here, which is at about 63,000, cannot be invalidated on this pullback. So as long as we hold above 63,000, we're good. That's what we're looking for. So also this one, of course, after 4 comes 5, looks for higher prices, but it simply means that the current consolidation we're in is going to extend in time. And that's the unfortunate nature. But the longer the base, the bigger the breakout. Or as they say, the longer the base, the bigger the flight into space. Okay? Just as we had previously with all of almost 2023 massive breakout. Okay? Now, zooming out further, these are, as you know, the 4 phases of Bitcoin. And we're still in the usual mid phase. These 4 phases are based on the halving and the bear markets that we've experienced, and each has lasted 1 year. The first bear market 2014, the second bear market 2018, the third bear market 2012. Fourth halving was this year, third halving was 2020, the second halving was 2016, and the first halving was 2012. So every 4 years we have a halving, every 4 years we have a bear market. We can then make a nice cyclical analysis and divide this 4-year cycle in 1 year slices. Very simple. And we're now in this late bull. The mid bull has just ended. We're in the late bull, and price will often go parabolic in a late bull, just as it did in 2013, as it did in 2017, as it did here in 2021. And again, we'll see a red wave 4 pullback, as I shared with you before. There's the red wave 3. Right, that is the red wave 3, and then we get, of course, the red wave 4. Okay, that's what we're looking for. So still a bit up in the air now, because the price action is so discombobulated that we can interpret this as a 4 as well. But once again, after 4 comes 5. So bigger picture wise, we're still good. Bigger picture wise, the cycle suggests a top late of later this year. All right. So that's what we're still looking for. And the top can be anywhere between 182,000 and 444,000. We don't know where Bitcoin is going to top exactly. Is it 276.4 or 376.4? Or is it going to search out the round numbers, the 3s and the 4s? To be determined. For now, I'm not going to worry about it. For now, we just let this play out. And for now, we're going to focus on either this 1-2 setup, or we're going to focus on this continuous basing where we are in a 1 degree higher fourth wave. And here as well, you can see the larger fourth wave can easily go back to the 70 to 60,000s. Okay, so this larger fourth wave that I showed you here can still easily go back to that low level. Okay, that is still very possible. So once that one completes, please be aware that a larger correction should be expected. And that's nothing out of the ordinary either, because we've had these large corrections. For example, if we look here as well, this is a fourth wave. Okay, this is a log scale, but here we went down for about 2 months. And we had a fourth wave here, down for a month. and we had a fourth wave here, down for a month. All right, actually 2 months. So that should be expected. All right, so this is what we are currently looking at. All right, from the short term to the long term. We still believe Bitcoin is correcting from the bottom it made in February into the high here at around 102,000, and it's simply and unfortunately becoming protracted. Can't help it. We anticipate, we monitor and adjust. It matches with what other people are seeing, with of course the invalidation level as well. We are wrong till proven right. It does count very well as an impulse higher, but it doesn't mean that is the exact correct wave count. So we're once again right in this ideal 2/B target zone, and now we want to see Bitcoin rally soon. Over the next few days to weeks, Bitcoin must break out above 106,000. If not, we will have to move to this larger fourth wave scenario, which will still be followed by a larger fifth wave, followed by an even larger fourth wave, followed by another fifth wave to complete the bull cycle that started in late 2022. I hope you appreciate this update. I hope you understand where we are from the short term to the long term, and that we're still simply trying to figure out where exactly Bitcoin is in the short term, and that the upside has most likely not completed. Take care, trade safe, and I'll catch you all next week.